Are you self-employed and you want to purchase a second home, but you're just worried whether you can qualify or not? Let's dive into the things that home loan lenders look at for self-employed borrowers. First and foremost, I do want to challenge this thought that just because you're self-employed means that you cannot obtain home loan financing. And that is just not the case. But there are a different set of rules when you're self-employed that lenders are looking at things a little bit different because it is more complex than if you just receive a straight salary and your W-2 and 100% of your income is coming from that type of source. So I do want to dive into some of these lender requirements, dispel a few myths, and then just ensure that you're thinking about what the lender is going to want and need if you decide to push forward with purchasing that second home. Okay, so tips and tricks. First and foremost, why? Why in the heck is financing for a second home different than a primary residence? Well, it's a second home, so very likely you already own a primary residence. You may already own an investment property. A second home, the intention of that is this becomes a home that you are going to use, whether that's a vacation home or it's a secondary residence that's not classified as your primary. So because of that, second home financing differs from primary residence financing by the terms. So the interest rates are higher on second homes than they are primary residences. So the down payment is more, the loan program availability is different. And really when we kind of think about, okay, all of that's fine. There's no difference between what I just said, whether you're self-employed or whether you're a straight W-2 wage earner. And I do want to add, we have many people that pay themselves a W-2 depending on the organization structure of their company. If you own more than 25% of the company, even though you're paying yourself a W-2, you're still considered self-employed, which means that what I'm about to tell you is relevant. Let's kind of think through what is home loan financing? What type of investment is that? And it really comes down to, it is a risk-based type of lending program. And when I share that with you, I think as entrepreneurs, you're going to understand that. If you were going to give somebody $200,000 out of your pocket, then you would want to be sure that they can pay it back. And at the very basis, at the very foundation of this, that is what risk-based lending is about. And that's what home lending does. That's what all home lenders do. Combine that together with the Dodd-Frank rules that went into effect after the Great Recession. Now there's federal lending requirements that require lenders to document, according to lending guidelines, the ability to repay. So because of this, the nuances for self-employed borrowers may feel a little bit more cumbersome, but we work with a lot of self-employed borrowers, and a lot of it's really going to come down to your tax returns. First, know that if you have been self-employed for less than 5 years, you're going to have to be able to provide to the lender 2 years of filed tax returns. So that's the 2 most recent filed tax returns. Now, depending on the year, or the time of the year that you're wanting to purchase a house, maybe it is early in the year and you haven't filed last year's tax returns, but you want to purchase a house before you're going to file them. Now the documentation is going to be even more. So in that case, it would be the previous 2 years filed federal tax returns, all pages, all schedules, and then you may have to provide a year-to-date P&L for the most recent year that you haven't filed taxes for. And then depending on when in the year that you want to purchase the house, you may have to provide a year-to-date P&L. So again, those are some of the additional hoops that self-employed borrowers have to go through, but it's not that big of a deal. Is providing the documentation to the lender, and let us get into if there is a problem. So why would there be a problem? Well, being self-employed, you have a lot of write-offs. And I think one of the misconceptions is, and we see it all the time, you can gross all this money. And in your head, you're making all this money. But from a lending standpoint, It's not about the gross income. It comes down to the net income when you're self-employed. And this is the pivotal, the number one difference between being self-employed and being a traditional, let's just call it wage earner. Now, if you know that you want to purchase a house and you're thoughtful about your tax write-offs, then you could talk to a lender and kind of get your plan in place. So when you get ready to file your most recent tax return, you're being thoughtful. I hear all the time, well, Kelly, gosh, if I don't write all that stuff, which I'm allowed to do, then I have to pay taxes on it. I know. I hear you. And this is why it is important to know that there are alternative home loan programs out there. And there are bank statement programs out there for self-employed borrowers. We talk with thousands of people, and a lot of times people just don't realize that you don't have to do this full income documentation process that I just explained. There are other options out there. Bank statement options are really helpful for self-employed people, especially wanting to purchase that second home. Now, there's a variety of different bank statement options. There's a variety of lenders out there that offer them. Some do, some don't. But typically, you're thinking about either 12 to 24 months bank statements. Those could be personal bank statements or business bank statements. Working with your lender, you'll be able to decide which program works best for you. But essentially what happens is over the course of either the 12 or 24 months, your deposits are going to be averaged, and then that would be your usable income. So that's kind of how bank statement programs work. Now, debt to income ratio, when we are working with our self-employed borrowers, a lot of times, depending on the type of business, there are a lot of vehicles involved, and many of those vehicles are paid through the business. Keep in mind that if the vehicle is in your name, your personal name, but paid through the business, there may be a way for that vehicle payment to be excluded from your debt to income ratio. 2 steps to this though. 1, you would have to provide the 12 months canceled checks showing that the business pays for the car. And if you're doing a full income documentation, self-employed home loan, then in addition to that, the lender will want to look to see if the car and truck expenses on your tax return include what you're paying through the business for the car or the truck. So kind of a 2-step process on the full income documentation strategy. On the bank statement strategy, obviously you're not providing the tax return, so that piece of it would not come up. But the debt to income ratio itself is still fairly common, whether it is full income documentation or I'll call reduced income documentation or bank statements. Now, the difference in the loan strategy, though, is that you're going to pay very likely a higher interest rate when you're using a bank statement program because it's much more niche-y and it's not readily available like mainstream financing. So the terms of your loan may be different. But in having these conversations with self-employed borrowers, they're like, look, I'd rather pay a higher interest rate and maybe a higher cost to obtain the loan and still get all of my tax benefits of writing all these things off. So again, it's just one of those different conversation, right? It's just different strategy. But down payment and interest rate and terms will look different on bank statement programs for self-employed borrowers. Reserves, this is another thing that the lender or the program may require that you have a certain amount of reserves in the bank after closing. So they're going to look at your assets and they're going to subtract out whatever your down payment and closing costs are for the second home. And then whatever you have left over, this could be in your bank account, this could be retirement assets, this could be investment accounts. All of that counts as assets, but they may want to ensure that you have a number of months in assets post-closing, and that it would be after the down payment and closing cost on the new second home. Credit scores, generally we'll see a higher credit score requirement for a bank statement program. But if you're using a full income documentation program, the fact that you're self-employed, your credit score, as long as it's allowed by the loan program itself, you don't get a negative hit on, oh, I'm self-employed and I have a credit score of 680, it doesn't matter as long as you have the full income documentation strategy that you can meet the lending guidelines. The credit score is really not relevant in that scenario. However, over on the bank statement side, it is relevant. So higher credit scores if you have to use a bank statement program. And then lastly, there's so many different options. Again, we do work with a lot of self-employed borrowers. I would know that it takes longer for the lender to go through all of the documentation. So when we have that initial conversation, we're asking some details about, let's say you're a Schedule C self-employed borrower, meaning that you're a sole proprietor, and that's how you're filing your income on your tax return. In that initial conversation, we're asking you to look at line 31 of your Schedule C, and then we'll ask you about depreciation and a few things so we can kind of gauge, does it look like you're going to be able to use a full income documentation strategy, or do we need to move to a bank statement strategy? So some of those initial conversations are just helpful to give you a clear path on what you need to do. But let's say you're not quite sure, or you don't have your tax return handy, and you want to really have the lender get their eyes on it, which I recommend, then you would want to complete that pre-qualification application, let the lender pull your credit, and then provide the documentation to the lender. And they're going to review it and assess, okay, in this situation, maybe you can't qualify for the full income documentation loan, or maybe you can. But if you can't, then are you eligible for the bank statement program? So lots of different strategies out there for self-employed borrowers that want to purchase a second home. Oh, by the way, to hear one of our actual self-employed borrowers, who's a longtime client of ours, we've done multiple properties for this family, to hear his experience and his journey, just click the link below. I do think it's helpful because now you're really kind of going through this with somebody that is also in your shoes. And Jeff was fantastic. But even as many years as I've known him, to hear him say, I didn't know that I could qualify, I was like, oh my gosh. I just think these are important stories to share, because if he thinks that, then I'm sure there are a lot of other people out there that think that maybe they can't qualify to purchase a second home. So we're going to set that story straight. If you have questions and you're just like, where do I start? Call or text 480-725-0150. And we have a group here that really is committed to helping self-employed borrowers purchase second homes, purchase investment properties, or purchase a new primary residence.